What will happen if you mix up capital and revenue expenditure? Let's see. There is a company called ABC Limited. They have incurred expenditures in purchasing plant and machinery as well as purchasing raw materials. They had this new accountant who is not very comfortable or settled down in accounting nuances. For him, both look like purchases, right? Purchase of plant and machinery and raw material. So he accounted both as expense. And this has resulted in low profit reporting for the entity. Do you know what is the mistake he has committed? The mistake is he has not understood the difference between capital expenditure and revenue expenditure. Here, when they have purchased plant and machinery, it is not an expense, it is rather a capital expenditure. And when they purchase raw materials, it is an expense, that is correct, and that is a revenue expenditure. So what do we mean exactly by saying capital expenditure and revenue expenditure? Let's see. When I say capital expenditure, it is the money that is spent by the entity to acquire or upgrade or extend the life of a fixed asset. So if you are purchasing a fixed asset, it is a capital expenditure. If you are upgrading the fixed asset, it is capital. Or if you are doing something to extend the life of the fixed asset, it is capital expenditure. It means whatever the money you are spending here is going to give you long-term benefit. So anything which is going to give you future benefit, we call it as asset, and when it is long-term, we call it as fixed asset as well. And any investments in fixed assets are considered as capital expenditure. So the examples for capital expenditure can be like investing in building, investing in plant and machinery, or upgrading the assets, existing assets. So that's about capital expenditure. Let's move on to understand what is revenue expenditure. These are all the money spent by the entity on the day-to-day operations. It means these expenses are spent again and again and again. It means they are recurring in nature. So we call them as expenses, revenue expenses. They are recurring in nature. So now we have a fair idea about capital expenditure and revenue expenditure. So let us tabulate the differences. Capital expenditures are basically long-term investments, whereas revenue expenditures are daily or routine operational expenses. Capital expenditures are always considered as an asset, whereas revenue expenditures are treated as expense. It means capital expenditures will go and sit in balance sheet under asset, whereas revenue expenditure will be treated as expense. It will be taken to profit and loss account, and these expenses will reduce the profits. Capital expenditures are mostly one-time expenditures, whereas revenue expenditures are recurring and regular expenditures. And the benefit of capital expenditure will go beyond 1 year, whereas benefit of revenue expenditure will get exhausted within 1 year. The examples for capital expenditures can be like land, building, machinery, vehicle, and for revenue expenditures, it can be all recurring payments like rent, salary, utility, and so on.